Can you guys hear me? Please, if you can hear me, say something so I can start the class now. All right. So far we've been learning video pause. What the fuck happened? Why was the video pause? Okay. So far we've been learning about support and resistance. So today I will be teaching you guys something known as the breaker block entry model. That is what I call it. I call it the breaker block entry model. So for the breaker block, all you need is just one criteria which is structural liquidity. What is a breaker block? A breaker block is a failed order block. Let's say we are on a continuation, which is we have our break of structural liquidity, which is the failed pullback that failed to enter the order block. That is our structural liquidity. Then this now is supposed to be our order block. Price is supposed to tap here, then go up, but rather price broke past it. You get? And put it like this. This is our order block here. So price break past the order block like this, then give us structural liquidity, then tap into the order block again. You start selling from there. Get, this is the breaker block entry. This is one of the entries I like a lot. You get this continuation entry for which is the OBC order block continuation and the support continuation and resistance continuation. You know, we have resistance continuation, which is when following the downtrend, support continuation when following the uptrend, the order block continuation when following the uptrend or downtrend. Yeah, that is for the smart money concept. So we have the breaker block. The breaker block, whenever price did not respect an order block, that is when you get a breaker block. So let me show you how it is on the live chart. If you see here now, this trade I took here, it is a breaker block entry trade. You get price so far on this zone like this now, from here to here. You see price was in a downtrend. You get, so by the time price came back to that order block, price broke past it. Price was supposed to get to this particular zone, then say, but rather price broke past this zone, then went up. During the process, price came back and gave us structural liquidity. I'll also show you guys single candle inducement. There's something we call single candle inducement. When using this, I use it on the 5 minutes and 3 minutes. I only trade on 5 minutes and 3 minutes. If I go high a lot, 30. So those are the 3 time frame I use in trading: 30 minutes, 5 minutes, and 3 minutes. Those are the 3 time frame I trade with. I don't trade with other time frames. Just 30. If I'm trading support and resistance, I use the 30 minutes. If I'm trading with the smart money concept, which is the OBC, OBR, and breaker block, I trade with 5 minutes or 3 minutes. I don't go higher than that. You get, very, very, very important. All you need is the 4-hour time frame. You have zero business with the daily time frame like other traders. You only need the 4-hour time frame. So this is how it is. If you look at here now, we are on a downtrend. We have a break of structure here at this particular zone. We also have on that inner break of structure here. You get, so automatically this zone now is supposed to be a breaker block zone. price did not respect it, and I'm very sure it's because of news. You get, so price did not respect it because here would have served as our structural liquidity. No, I said structural liquidity is all you need for the breakout block. You just need to get that failed order block, structural liquidity, and you are good to go. Normally, price is supposed to come into this order block, then continue selling, but price break past the order block. You get, so like I said, once price break past your order block, all you need to see is structural liquidity. Once you get the structural liquidity, then wait for price to tap back into the breakout block. So like I was saying, so that is how it is. When price came back here, price is supposed to give us confirmation, then we'll buy. But because of the strong movement, price continue downwards. This is supposed to be a entry for a breakout block, so you count that as a stop loss. You get, so this is how the breakout block entry looks like. You need, firstly, you need an OBR or an OBC. Let me show you guys what an OBR looks like. An OBR is when you are having price going up. You need three criteria to make an OBR. First criteria you need is a break of structure. You get, let's say this is for the sell side OBR. You need a break of structure, and you need a market structure shift. You get the structure liquidity, then price tap into your order block. You sell. You get, so this now here is your break of structure. I will show you on the live chart, and I'll also show you an OBC on the live chart. So this is how, this is the diagram for the OBR. You see, that is your break of structure to the upside and market structure shift by breaking the protected low. You get, so once price break out your protected low, you've changed direction of the market to a downtrend, and then you have your order block. Yeah, you need your structural liquidity, which is the failed pullback that fails to enter the structural liquidity. Then price tap into it and give you your confirmation. Let's get down to deriv. Let me show you. There's a trade I've been holding on deriv on step index. I still haven't canceled that trade, but there's this particular place I place my TP. Just in case price reverse back, I will be stopped out there. I've been holding this trade for almost 2 weeks to 3 weeks now, if I'm not mistaken. And I posted this trade on our group and said everybody should take the trade then. The fuck is that step index? All right. You can see I've actually even hit TP. Let me go and check that account. You see, this is a 1:14 trade. I hold this trade for almost 2 weeks. You get, I entered this trade with an OBR. Let me show you. I said the OBR, what you need is a break of structure, market structure shift, and structure liquidity. So let me break them down. I first mark the entry with the one day, which is the daily time frame resistance, but I did not enter immediately. You get, I waited for market to give me a structure I can actually follow properly, and I entered through the reversal, which is the OBR. This is our break of structure here. Let me zoom it properly. This now is our break of structure. Yeah. This is our market structure shift. Yeah. This downside here is our market structure shift. The moment price traded below this protected low, that became the market structure shift. So this now is our structural liquidity. Yeah, that is I entered there. And this is my order block. You can see the order block. The order block is the last opposite candle before the candle that causes the impulsive move to break structure or change market structure. That is your order block. As you can see, the green candle here, this small green candle before that massive red, that is my order block. When price gets to that place, tap into it. I waited for my confirmation and entered the market from there. And I used where I targeted my TP was on the daily time frame. You get, this was where I was targeting on the daily time frame as my TP. But I also said on the group that day that I believe price will fall to this particular level around there. That's what I said. I said, so even if I targeted that zone as my full TP, I will leave at least one position. Let me even check the trade if the one position, because I put full TP on almost all of them. This place now is known as protected low. So I'm expecting price to just get here. So step index will still fall a little before pumping upwards. So this is what I'm expecting the market to do on step index. Okay. This is our structural liquidity. This is also an OBR. What I'm marking out is an OBR. This is our break of structure. Yeah. This is our market structure shift here. So on the daily time frame, we already have an OBR that I am waiting for price to get to, then we start taking our buy to the upside. You get. So you can see I held this trade for almost 2 weeks. It is on the 30 minutes time frame. You get. So that is for the OBR, and let me show you how the OBC works. The OBC now, you can screenshot this diagram, please. You can screenshot this diagram or draw it out if you have a pen and a paper. You can draw it out. Get. It will help a lot. This diagram will help a lot. We'll get back to the breaker block. You know, I said the breaker block is one of my favorite entry. I uses the breaker block a lot. The reason why, because compared to the rest, it tends to respect more. So let me just say, maybe it's to me. You get, there are some people who tell you the OBR is better or the OBC is better. Every have their individual opinion. I can tell you now, like support and resistance and breaker block are the best entry. You get, that is my own opinion. So you can try all of them and see which one works for you. So now this is for the OBR, down to the OBC, then we'll get back to the breaker block. You know, we started with the breaker block, but we'll go back into the breaker block. So let me clear this out. Remove our drawings. These things, I tend to like removing them a lot. So this is how the OBC looks like. The OBC now, for the breaker block, we needed, the OBR, we needed 3 criteria: the breaker structure, the structure liquidity, and the market structure shift. For the OBC, you need only 2 criteria. You need a break of structure to the upside or to the downside. You get it, because it is OBC, because it is known as order block continuation. You are just following the trend. You get. You need a break of structure to the upside, like this. Then you need a failed pullback that failed the structural liquidity. Let me explain it. Structural liquidity is like a failed pullback that failed to tap into your order block, then go up. That is what is structural liquidity. Because doing that structural liquidity now, those are where some people are setting their limit order. You get, that is what structural liquidity is. Some people are taking their buy from there. You see price go up a little bit, and price just fall and stop them out. That is what structural liquidity is. Because I've already said this before. Liquidity is known as money. You get, so anywhere there's stop loss, limit order, those are liquidity zone. Price need to sweep those people out and continue to your direction. So whenever you hit stop loss, is you being swept as liquidity. That is it. So this is our order block. Price tap into the order block, then you buy. This is for the continuation entry. You just need the order block to be there. Then what you need is a break of structure. This is your break of structure here. This is your structural liquidity. So as you can see, it works. That is how it is. So draw out the diagram or take a screenshot of it. So I would like a few seconds to do that so we can proceed. All right, let's proceed now. So this is for the OBC, known as order block continuation. I was supposed to even be typing this out, but I'm kind of in a hurry because I want to take my drugs. I'm not feeling too fine. So let's go to the live chat. The reason why I'm showing you on derive is so you know it works on derive and any pair you are gonna try it on. You get, so it works on any pair. So for the continuation entry, you need just the break of structure, market structure shift, and your order block. So the way you find that is simple. We have a continuation here. Coming. I have to find this properly. I don't want to just show you randomly. Wait, it's actually easy to spot. Okay, if we are using here, we have our order block here, which is this red candle. Okay, we have our break or structure here. When price broke this particular zone here, that is our break or structure there. Then this is a single candle inducement, a week out. This week now is your structural liquidity. They call it single candle inducement. That is your structural liquidity. Price tap into your order block. Someone like me, if I'm entering from this Arami here, that would have been my entry. Though I would have installed that on this. Sometimes when these things start mentoring like this, they tend to piss me off a lot. So you set your stop loss there, you target your 1-3, just like that. I don't go above 1-3. You know one thing about this strategy, you can go above 1-3. All my strategies, there are strategies that can go above 1-3, they can go 1-7, 1-8, and you play out. But the reason why I tend to go with 1-3 is because 1-3, I don't hit TP. Your lot size is what actually matters. So that is for the OBR. The OBC, we've talked about the OBR, which is the one actually here. So now let's go back to the breakout block, which is the main topic for today. So let's go back to the breakout block, which is the main topic for today. Like I said, the breakout block is a failed order block. You get, so be it an order block reversal or an order block continuation. Whenever the order block fails to hold like this now, price is supposed to go up. So once price decides to break downwards, all you need is structural liquidity. You get. So I'll show you multiple ones, then you can start trying it by yourself. Structural liquidity. Sometimes structural liquidity comes as single candle inducement. So I will show you that. Then you enter from there. This is for the sell side. You get. So I will show you on the live chart. I use this on the 15 minute, on the 5 minutes. And here's the thing, it works on any time frame. It is not just the 5 minutes. You get, it works on the 15. It works on any time frame you desire to use. So don't just say, okay, it works only on the 15 minutes. No. So if you see here now, I actually took a trade here on this same ETH, which played out. I made about $100 and something from that trade. I'm coming crypto. should be it. You can see it. I smashed full TP on the trade. It is a 1:8 trade. You can see it. So, like I said, all my strategy plays out even 1:10. If I had used 1:14, you'll see it will play out. But I use 1:8, though actually it went beyond the 1:8 jar because I did not set the TP. I just leave it like that. And I was monitoring it. I was trailing my TP. So if you can see, I entered this trade with an OBR, with a breaker block, sorry to say. This now is our field order block. Price was supposed to come here like this. Now, we have a break of structure here. Price is supposed to come, tap here, then proceed to go up. You get, but rather price decide to just break past it like this now. So the moment price break past the order block, what you do, you wait for structural liquidity. Like I said, this is our structural liquidity here, this candle, not this one. You might think it's this one here, but it is this wick here. Those are known as single candle inducement. That is your structural liquidity. Though these other things are still liquidity, but I think it's good to pick the one closest to your breaker block or order block for you to hold your ground tight again. So when price tapped me in, it gave the essential weak rejection pattern. That is the confirmation pattern I use. I learned that from this guy, Goat Slayer. So it is a nice confirmation pattern. I can't explain how that thing works unless I show you on live chat, like when it's actually happening. Trying to explain it is kind of hard. Yeah. So this is a breaker block. I will show you another breaker block on the chart. Let's just keep going. Like I said, this particular zone here is a breaker block zone. Now see, that is an order block there that price did not respect. Then this was our liquidity. Now see, price gave us liquidity. Price tap into it, and price is supposed to go up, but price did not respect it and just continue going down, just like that, which is not supposed to be so. And one thing you need to know, you can use breaker block of how many years, it will still work. I've actually used a 2 weeks breaker block on one particular trade, and it's actually played out. So this is another breaker block entry. Yeah, this is a breaker block entry. Let's see. This is our structural liquidity. Let me zoom in. You don't need break of structure and all those things, just the liquidity sweep. That is our structural liquidity, because this was a downtrend. Let's see. So that was an order block price was supposed to tap into, then continue going down. The price break past that order block, came back, retest it, and gave us a bullish engulfing pattern. So if you were to enter, you'll be entering from there. Stop loss is okay here. Targeting 1:3. I don't go above there. You can try to go above. You get. So if I'm trying to do like go and account something important, I see even 1:6.7 is working, just like that. If I'm trying to go an account or doing something important, I don't go above 1:3. My lot size we compensate for the rest. So that is how it is. You can see it. So I will give like 2 to 3 more example, then we close for today. We also have another one here as well. This was supposed to be price going up, and this zone. Let's see. So price was supposed to keep going up on there. By the time price came back here, this is our order block here. Price is supposed to tap into that order block. Yes. Price is supposed to tap into that order block and proceed to go up, but price did not respect that order block. While our price broke past it, then you can see it. This is a single candle inducement. This candle here, That is our structure liquidity. It's a single candle structure liquidity. Let me zoom in. So when the market came back there, this bearish engulfing here would have been my entry. You can see how that candle engulfed the rest. My stop loss would have just been equal with this, and I would have been targeting my usual 1:3 since I don't go above there. You can see it. It took a while before price hit the TP, then proceed to go up, just like that. And there's also another one here again. There's also another one here. You can see from this zone here to this zone. That is also another breaker block entry. This is your inducement here. This single candle here. That's your inducement. When price tapped in, price gave us a evening star pattern around this zone here. That would have been your entry. Then stop loss a little bit above. 1:TV, just like that. You can decide to go past there. You get. You can decide to do 1:5, and say even 1:10, 11, and so on. You get. But me, I don't go above 1:3. That's just the way I trade. But you can decide to say, okay, I just want to be going 1:5 on all my trades. On yourself, by yourself, you get 1:5 on all my trades, and they will also play out. You can see 1:5, they will play out well, depend on how you trade. But I don't trade like that. I just go 1:3. You can see it. This was supposed to be also another entry here. Let's see. That's supposed to be another entry. Price is supposed to tap into this breaker block here, but price did not tap into it. This is our inducement here. Price tapped into it, gave us a bearish engulfing confirmation here. These are those type of trade that will kill you. Gave us a nice bearish engulfing to show, yes, you can place that wicked sell. Let's say we're doing our 1:5, and price proceeded to just shoot straight to SL. So that is how you trade the breaker block entry. It is very easy. It works on any pair you are interested in trading. Any pair, I'm not joking. Any pair you're interested in trading, it works on it, and you buy your cash on it. Again, let me show you. The pair I tend to use it a lot on is USD JPY and GBP USD. Why I tend to use the continuation, it's what the breaker block works on gold, but I tend to use. Hello?
Yes, sir. Please, I hope you are recording.
Hello? Yeah. The breaker block works. You can see I use it a lot on USD JPY. You can see. If I zoom into it, you see TP, SL, and so forth. I use it here, TP, use it here, TP, use it here, SL. Then I enter there with a continuation. On USD JPY, it seems like continuation hardly works. That's one thing I've noticed. So I just hit SL here. And this trade is a 1:4. You can see. Then I also use it here again. You can see plays out full TP. Here as well, full TP. This is a continuation. This is a breaker block. I actually hit break even on this trade. This is also a continuation. You can see continuation, not that they don't play out too, but they tend to stop you out, then proceed to go. You can see stop me out, then went full TP. Then this is also another one here. Full TP on that one. This is also another one, full TP. I remember dropping this trade, if I'm not mistaken. Then this is also another one again, full TP. This is actually on the 3 minutes time frame, full TP. You can see it. Also another one again, full TP. You can see it. Then this one is also on 3 minutes time frame. Sorry, full TP as well. Okay, this was the one I dropped for you guys. This on the group. It is a continuation. This one is a continuation. We first enter through this breaker block here. The breaker block did not respect. Then the continuation respected. We enter with this as well. This one hit break even. The last one was stop loss. And this trade full TP. This one fucking stop loss. That thing fucked me up. So that's how it is. So if price now decides to say, okay, price trade below here a lot, I'm waiting for price to come. Let's say, because here now it's now our breaker block. Here will now become the breaker block. But it seems that place decided to respect it. So it is still valid for that block zone. So that is how it is. And on GBP USD, not that there's no SL, there's SL, but your TP, as you see, my TP are more than my SL. There's more TP than SL if you are good in what you do. You get this is GBP USD. These two trades, 1, 2, actually this one is SL, this one is break even, and this one is full TP. I hit full TP on this small tiny tree here. Full TP. Wait. This one is also full TP. This massive one. See price jaga still into TP. After the moment. So assume say I catch something like this now. This kind of trade now, we long like that. I don't know how much person for don't back. So you can see this is a continuation. I actually hit SL there. This is actually a break-even trade because when the way I hit break-even is whenever price hits half of my trade, I tend to break even. That is how I trade. Once price hits half, I break even. TP, TP. These are all breaker block entry. Breaker block, like that. This is supposed to be a breaker block. This, you can see half of it. This is a break even. Just like that. Same thing here. So breaker block, it is not hard. You just need a failed order block. This is the order block continuation. You just need a failed order block like this now. If let's assume price, when price came here now like this, price is supposed to, I was expecting price to go up, but let's assume price did not go up and price started to start coming down like this. Now I will start waiting for price to come back up, give structural liquidity like this, then tap into here again, then I'll start looking for a sell from there. You get, that is the breaker block. Once your order block did not hold, it becomes a breaker block. See here now, this was what I used in taking this buy here. Let me drag it so you can see it very well. And if you see here now, the structural liquidity now, it is this small candle. And see, that's this week. Now, that small candle week, that was the structural liquidity. And I entered with that bullish engulfing pattern there. That was how I took this by 1:4. Again, just like that. This now was supposed to be this now is also another breaker block here. Price tapped into it, respected it, fall to the downside. You get, so breaker block is just a failed order block that price did not respect. That is your breaker block. You get a failed order block, price did not respect that failed order block, automatically it becomes your breaker block. Let's use somewhere. Let me look for another one. So we are actually touched on. Here is a perfect example. Price, this was supposed to be another block zone. Price is supposed to come. Tapped on it to see. Give structure like it was about to go to the upside. And proceed to break it downwards. So the moment price break downwards, what you need is a structural liquidity. After marking out your breaker block like this, so you need price to create structural liquidity. And for here now, this single candle here, you can see that that's our single candle inducement. That is the structural liquidity. Price came in and gave us this bearish engulfing here. That's how you take your stop loss. You do your 1:3 or 1:4. That's it. Just like that. FTP dusted. So that is how the breaker block works. You just need a failed order block and you are good to go. Here is also a prime example. This was supposed to be a very nice entry. You get very, very perfect entry. Price was supposed to come, tap here, and then go. The price decided not to respect this other breaker block here. Yet not all the time price will respect the breaker block. Sometimes price will respect it, sometimes price will not respect it. Here price decided to respect this one. That's it. So that is how it is. A failed order block that the price was supposed to hold. This was supposed to be our buy tree. You get, if price did not respect that order block, you start looking for your sell on that trade. That is how it is. This now is also another perfect and beautiful entry. Price is supposed to continue going up. The price decided to pull back. It's supposed to have an up. Then price came down, gave us this structural liquidity. Then came back, tapped into the breaker block, then sold. So it is not that hard. Yet this now is our breaker block here. Structural liquidity. This is our structural liquidity. Price start us in. Price start us in and proceed to start falling. And price gave us what is known as a bearish engulfing pattern. So that is where you are entering from. So you can decide to say, okay, you want to be targeting the 1:5 or 1:4. You get. Well, I only use 1:3. That is just me. You are not subjected to say, okay, you too, you must use 1:3. You get. It is not by force. There's also another nice entry here. Another nice breaker block entry. Yeah. Price was supposed to tap here and proceed to go up. The price broke past it. Then this now is our structural liquidity. This entire zone like this. At the structural liquidity. Price tapped into it, gave multiple weak rejection. This is kind of one of those complicated spaces that if you are not careful, you will hit stop loss before price start giving you confirmation. Someone like me, it will be hard for me to like hit stop loss here because I will wait for price to even move past this entire zone like this before I will enter in this kind of place. Yes, because as long as the first tap did not give me confirmation, I am not fucking entering the trade. You might see me enter from here, like here, so here like this. That's where you start seeing me entering the trade, just like that. You simply see my stop loss 1 3. So sometimes I feel still go make the mistake, and nobody's above that mistake. Nobody's above it. But let me don't make it sound like I cannot make that kind of mistake. Nobody is above it. So that is how the breaker block entry works. You just need a failed pullback. What am I saying? You just need a failed order block. This is also another perfect entry. Yeah. This is another perfect entry to take your sell. You can see so far price is going up. Then price is supposed to come back, tap into that particular order block, then continue the buy. The price broke past it, giving us the structural liquidity, then confirmation. If I'm to enter this trade, I would have entered from here. Someone like me, I would have entered from here. One to 3 risk reward ratio, just like that. That's how I target it. So yeah, GBP USD, very beautiful pair. USD JPY, very fantastic pair. These are all wonderful pair. You get. You just need to look for the one that you decide, okay, I want to just be trading only this one and so forth. That's what I'm trying to do. I don't need one particular pair now. That's what I'm trying to do. It's okay. This pair will just take all my focus, because I don't want to be trading gold, USD JPY, USD, and Euro USD. Those are the only pair I actually trade normally for myself. The last ones I still enter Bitcoin. Let's see. BTC USD. BTC for a while, they suffer me like say I offend them. Like suffer me seriously, I'm not joking. Not to respect anything what I do. It's just so annoying. So now you can see now this is a breaker block zone. This particular zone like this now. If price comes to this zone, be expecting to take a sell from that zone. You get, that is how the breaker block is. Similar to how here now. Similar to how here is also a breaker block zone. That is an order block that fails to hold. Yet price is supposed to tap there and continue selling, but price broke past it, giving us a structural liquidity here. This is our structural liquidity. Then tap into it. If I was to enter, I would have been entering this trade from here. Because of that essential weak rejection pattern. You get. Then you can just do your why should 3 weeks reward. You get, or why should 4. Whichever one you desire. It is up to you. And over here now we also have another from this zone here. Another entry for buy there. You can see it. We'll get to gold before we close the class today. After gold we close. You can see we also have another entry for buy there. Which price gave me this pattern here. This would have been my entry. That morning star there. Then you target your 1:3. Target your 1:3. Just like that. Can go 1:4. I always go 1:3. I mean, once price reached like half of my risk reward ratio like this, I've said this multiple times. Whenever price reach half of it like this, I always set my stop loss as break even. Then you see me, I'll just go sleep like that. That is how I trade. Whenever price reach half, I just set stop loss to be, then proceed to go and sleep or do something else, just like that. You can also see this zone now. This zone hold. Yeah, you can see that place is actually a pullback. it is an order block that was supposed to hold, but price break past it. You can see the order block there. So this is another breaker block, and this candle here is our single candle inducement. Price tapped into it. This would have been our entry. Then you target on why I should TV. You can target why I should fall. If you have the patience, you are going to smash full TP. You get. So that is how it is. This place I made mistake here. I would have sold on this zone. This is supposed to be like a continuation. Sometimes it's good to use big screen when using phone to do analysis. You tend to miss so many important things a lot. That tends to happen to me a lot. If I'm using phones to do analysis, I miss a lot of important things. This is also another nice entry here. That's another block that did not hold. If I'm to enter from this trade, I'll be entering from like half of this thing safe, or even the end here. My stop loss will be here. And I'll be targeting 1 issue 3. That's good. Full TP, smart. Just like that. So breaker block is one of the most sweetest entry model. You can use it on any this thing safe. There's a breaker block here for you to enter the market. So it is just that interesting to use. Okay, it's interesting to use. There's also a breaker block here. Similar to how this one here, like this, you can see it. This one here was what hold this thing to fall down. So you can see breaker block is a very nice entry. There's also another one here. The price, it seems like price is not tapping into it. Okay, price tap into it here. This particular place. Then fell down. So it's a really nice entry pattern. I also have another one here. And this is the one on the 30 minutes. So I see if I have one here. Price tapped. One issue 3. Just like that. That's it. Let's keep going down. This is the nice sell zone on step index. This entire area is a nice zone for you to sell on step index. Very beautiful sell zone. If you sold from here now, that's very. This is our single candle inducement. You see it. So if when price tapped in, someone like me, I would have been entering from this candle here. I went out from that candle here. So this thing is still even a valid trade. Let's target it like this. Or target that ending this thing I was talking about. Target here like full TP, which is like 90% guaranteed. And you can target 1 issue 14. Just in case price keep doing what price is doing. So you can see price have been using the breaker block to keep doing things so far. So even here like this now. Even here, breaker block was active. And this very zone here. This particular one hold. That is an order block. This is an order block that actually failed to hold. You can see it. Price tapped into it, gave us the confirmation pattern there, a bearish engulfing pattern. So if you have targeted in 1:5 on this, you get full TP. 1:3. I don't go past 1:3 on my trades. Which are depending on the movement of the market. Sometimes, if like after sometimes I say, okay, I want to just relax for today, so I just place the trade. Then once price reach half, I break even, then leave it. Like I don't even set TP. I can just check it once in a while, then see how much I'm actually making on that particular trade. We also have another entry on the breaker block here. This particular candle. I drag it, you see, it tapped in. Because this was supposed to be another block. You can see it there. Price did not respect it. It tapped in here. This is our inducement, which is our structural liquidity. So as you can see, this is one of the most sweetest. That's the reason why I said today that breaker block, support and resistance are one of the best strategies because they tend to respect like a lot. 1:3. You can see 1:3 tend to play out a lot more compared to the rest. That's how it is. You get your breaker block and you are good to go. So now this is another nice zone. This is a very beautiful entry zone. So let's see. Somebody should mark this out and see if it's play out. Yet, let's see if it's play out. So it is a nice zone. It's a very nice zone. So okay, I said I will show you guys on gold. I said I'll show you guys on gold, which is what I will do. All right. Before we go, XAU USD. These are all my trades on gold for a while now, if I'm not mistaken. They are mostly continuation. Mostly. But this is a breaker block entry. This particular one is a breaker block entry. They are mostly continuation, mostly on the 3 minutes time frame. This is also a continuation. This is a breaker block entry trade. You can see it. That's a breaker block, and there are 3 minutes most of the time. This is a continuation trade that I missed. SL. This is supposed to be a breaker block entry trade. From here, you can see price tapped into it but did not respect it. Price was supposed to sell from there, so I hit SL on that trade. This was on that trade I hit SL as well. Price started going up. Then I used this breaker block here to catch 2 trades. Let's see, caught 2 trades. 3 minutes breaker block, 5 minutes breaker block. These 2 back to back simultaneously. And I caught this one here. Now you can see where this thing is. A mistake I don't take connect the distance. So also another breaker block. And this one is a 3 minutes continuation, price in respect. This is also another continuation. The news is what's ruining that particular one because of news. You can see it looks good on gold. But on gold, I tend to use continuation entry a lot. See these 3 trades I caught back to back on gold. Continuation, breaker block. You can see them. 3 trades. This one here is a breaker block. You can see the breaker block here. Then this is also a continuation, but price did not respect it. Breaker block entry, breaker block entry. That's it. This is a breaker block, this is a breaker block. This is a continuation entry. This is a breaker block entry, breaker block entry. You can see them back to back, breaker block, they played out, continuation, breaker block. You can see there, that is also another breaker block entry. This is a nice zone for a nice buy. You can see this is supposed to be a breaker block zone. Very beautiful zone to take your nice and beautiful buy. You get, that's a very nice zone. So that is how it is. You get, that is for the other block. So today I showed the other block continuation, the other block reversal, and the breaker block. So in case, but I talked more on the breaker block than the other two. The reason why I was not planning on talking about the other two, but you can't actually understand the other two properly without, you can't understand the breaker block properly without understanding the other two. Yeah. So that is how it is. So today marks the end of our class. If you love the class so far and you want it to continue, you can invite more people. You get, like I said, if we can get to 300 members, I will do free class throughout this month. But in case we don't have up to that members, our mentorship is really, really cheap. So you can afford it. You can send me a DM privately. Then we can discuss in case you are interested. So I'll see you guys next time. And good night. Let me go and take my drugs. Good night.